Metals resources are going to do well for a different reason. We have underinvested in productive capacity in industrial materials, oil and gas and base metals for 30 years. That's okay because we overinvested in them in the 70s and the 80s. So we're living off the surplus that was generated from a period of overinvestment. But that period's over. We are living as a species off oil fields and copper mines that are as old as me, which is to say they're well past their prime. And we are going to have supply shortfalls. We are still underinvesting in productive capacity in base metals, and particularly oil and gas today. And if you underinvest, if you reduce sustaining capital investments in capital-intensive businesses, you get away with it for a couple of years, 2 or 3 years. But over time, you impair your ability to produce. One example would be the Resolution mine in the state of Arizona, allegedly a politically secure jurisdiction. That mine, over 1 billion tons of 1.5% copper in a place with wonderful infrastructure, in a community that's full of copper miners, has now been 26 years in permitting. That discourages exploration for copper worldwide. It discourages development for copper worldwide. Meanwhile, we're using copper at a breakneck rate. It isn't merely increasing demand, which will happen with poor people in emerging markets becoming more wealthy. It's the fact that we have underinvested for so long that almost no matter what we do, other than a global depression, we're going to have supply shortages.
Yeah, and I think these things get held up until these shortages come, and then they'll sort of quickly get pushed through, but it will still take too long to come online.
Now, we'll get through all this. You know, we experienced all this in the decade of the 70s. In the decade of the 70s, the fact that we hadn't invested in extractive industry since the beginning of World War II came back to haunt us. The global growth that we experienced in the 50s and 60s meant that we had to pay the piper in the 1970s. And commodity producers, in particular in the oil business, understood that. The price went up. That happened. We're basically in the same circumstance today. We've underinvested in productive capacity for a very long time. Meanwhile, global growth has continued to pace, and we have run out of an inventory of producible assets that we have in the pipeline. They're out there. We just need to go find them and develop them. And that takes time, a lot of time.
Yeah, I think something that people look past is it's not just finding them, it's actually, having it at the right return. So let's say, if it costs too much to actually pull out of the ground, you need a much higher price to then want to invest. So for example, some oil, there's oil everywhere, but it just might be that oil price needs to be $100 a barrel versus $40 a barrel to break even.
The other thing, if I'm right, which is to say that inflation increases, means that all of those costs increase. And if inflation increases, it's not unlikely, as far as I'm concerned, that the market begins to recontrol interest rates rather than the government controlling interest rates. And if you have the circumstance where inflation is rising and the interest rates are higher, the real cost of developing productive capacity and resources goes up too. And people need to understand that. The 40-year period of declining interest rates has forestalled some of the problems in natural resources because the cost of capital has been unrealistically low. Part of the boom that we have seen in U.S. oil production has to do, first of all, with the conjunction of technologies that were appropriate, but also has to do with the very low cost of capital the oil industry has enjoyed in the United States. And if you begin to reverse that, if the march of technology, as an example, in the oil and gas business slows, or if the cost of capital goes up, or if the social rents, taxes, and royalties go up too much, you will exacerbate the supply problem and goose the prices.
Yeah, and I think the challenge as well is if prices come down in the near term, a lot of these shale producers need $60 per barrel. If it becomes below that, they're going to go out of business, and then we're going to sort of have this vicious cycle of too low production has to go up. Sure. So there's this, especially for oil, I think that's a big challenge.
That is absolutely correct. Something, as long as we're on the shale subject, that we need to understand is that although we have managed to double U.S. supply in a fairly short period of time, just over a decade, we have done that because we were able to employ several new technologies, horizontal drilling, management well drilling, three-dimensional seismic, and fracking technology. The low-hanging fruit associated with that, which is to say the Class A undrilled locations in places like the Delaware, the Permian, the Eagle Ford, are in some danger of being drilled, which is to say, without further advances in technology, we're going to be left drilling our B-grade locations, which means that the surge is over. If you combine that, and I'm not saying it's going to occur, I'm not saying that technology won't continue to increase. Maybe it will. But if we don't, and if the interest rate rises in a capital intensive business, you could have some supply problems. One of the things that you learn in these shale projects is that the decline curves are extremely rapid. In the old conventional projects, your decline curve may have been 10, 12, 15%. In the shale projects, it's not uncommon to have 75% of the production of the well occur in 18 to 24 months. Now, sometimes you can retreat those wells and go back and increase production. But what people don't seem to understand is that without the constant application of capital to tier one locations, the production growth that we have seen can go into very rapid decline. And in the circumstance that you describe, which is to say falling commodity prices with less incentive to drill and less incentive for people to provide that capital,